don't use the moving average because it's being calculated within the last 9, 10, even 20 candles, especially if you would use a 5 or a 10-minute chart. That would take too much time. Most likely the movement will be already over. Instead, there's an indicator, you find this on TradingView, called the Anchored VWAP, and it will calculate every candle. That means, for example, a movement you can see from here to there took us only, as you see here, from 1611 to 1637, just like 20 minutes. So when we use a 1-minute chart, we have 60 candles within each hour. That means a color switch, a green candle when the market pressures in a certain direction, is more reliable on the information than just using a moving average, because it will just take 20 candles in the package. It doesn't matter if the market was going up, the market is in a contraction phase, it will take in consideration. When using the Anchored VWAP and we place it on the lowest point where the movement was shooting out, right? Especially in contraction phases, there will be nothing. But if the market is trending, as you see it, for example, here, and you place it on a bigger rotation where the market came from, for example, on the highest point, as you see here, or on a mid rotation, as you see here, you will find a lot of confirming signals. And when just taking a 1-minute chart into consideration, by taking any red or green candle in your desired direction, you will find a lot of winning trades, what is absolutely cool. And what is more better on it is, of course, we have very well-known risk management using a risk-reward ratio of 5. That means if there is a small red candle, for example, and we would trade the red candle and we place our stop just above, just like that, and we aim for the biggest structure low, you find a lot of risk-reward ratio trades starting 5. That means when adjusting now and having enough leverage and adjusting $100, you will find a lot of trades with $500 or even up to $600 of winning trades. And it means that we can afford 7, 8 losing trades in a row and still be profitable by having this 1 or 2 winning trades in a row. So we're going through now a bit of the market structure, and very important is that when using the 1-minute chart, you will hear a lot that the market will wiggle around so much in the 1-minute chart. It is hard to trade. It is just dazzling around. And a very big reason for that is just that the market will tell you when it's almost untradeable. And you better listen to that using a 1-minute chart than using a Renko chart or a 5-minute chart and only have like 12 candles within each hour using a 5-minute chart. Of course, your stop placement is going to suck. And of course, you will not have enough information to listen what the market exactly wants to do. Very important is to make the chart so small as possible on the bottom, as you see here, and also then on the right side. And when you do that, you will not concentrate too much on the smaller movements. You can now see the bigger structure. You can see everything and even more than somebody can see using a 5-minute chart. And if you ever wondered, like, where is the market turning around if it wiggles up, you know exactly that the market will have a hard time showing you that. There will be many times where the market is more easier to trade. So for example, if we place here now the Anchored VWAP on the highest point, this is something very important using the Anchored VWAP. You can see here how the market does the retracement here on the Anchored VWAP. So just any red candle once the market dips in is very reliable. But keep in mind, there must be a rule set on how to place the Anchored VWAP. Always on the biggest structure highs, as you see here, the highest point where the market came from, or on medium, like on the mid rotations when the market does a push out that is very obvious in reference to the previous movement, just what is very fresh here. Then to place here the Anchored VWAP, and you're actually good to go then using the Anchored VWAP. I find a lot of trading students, also beginners, have very big struggles in using the Anchored VWAP and then just any red or green candle by not having enough market time. It's about to build your skill in trading, build a relationship to the market, to this one market. For example, I believe in the S&P 500 is the way. And then to keep this relationship consistent, like every good trader that goes on a vacation and comes back from the vacation is first going to look at the market. How's the market running right now? And there will be times where the market is more spiky. It's just literally hard to trade. and we know exactly it's better not to trade in those spiky, like in those spiky contraction phases here, even though if the market does a lower color switch like green red, and then you can see here the market does here green red lower, it's literally better not to trade these kind of things. Instead, what is better is to make the chart small, to identify if the market does your contraction phases. We use more the Anchored VWAP on the highest point or on the mid or on the contraction phases, like or the mid rotation, I meant, like here or there. And then exactly like once the market is above, it's hard to trade, like in this case, because you can see it's a hard contraction phase. Better letting the market push down and then looking forward. Can we see here, if the market here pushes down on the highest point, can we see here a signal? In this case, there was nothing, so there's nothing to trade. No trade means also we cannot lose money. This is also something that's very important. Here again, the market does a certain amount of movement. I love to measure these movements, like if the market does this kind of movement, placing the anchor where the market came from. And then once the market touches this, expecting that the market does the same move again as you see here. Of course, the market will do sometimes less movement, and we need to identify it so good as possible with the relationship to the market. That's exactly what I mean. On the practical side, it's more about if we can see that there's this small green candle. In this case, it's a very long green candle. That's not that good. But if there's something like a small green candle, I'm going to show you here an example. For example, the market here does here a push up, for example, and then does here a small green candle, what is very nice here. And when having enough leverage and adjusted here, please use a demo account, $100, and having the stop placement just under the green candle, not even under the color switch, because better having being not with 2 or 3 movements inside, but then being with another movement inside by having a more better risk reward. For example, like because the market did this kind of movement, market touches the Anchored VWAP, market should go up from here to there. There will be a risk reward ratio, as you see here, from 8. So that's a pretty good investment. So I can have 8 of these trades until it wouldn't be profitable using small candles. Like here would be 1 trade. Here you can see the market holds itself above the Anchored VWAP. Stop placement should be under the Anchored VWAP, because working with the Anchored VWAP on contraction phases when the market does here contraction phase here is just very important. And you see here's a risk reward ratio of 7. That means losing $100, making $740. Or for example, maybe taking this green candle here, making also around $740 to expect that the market does the same movement again. Very important. If the market goes under the Anchored VWAP and just does a very green candle, it's better not to trade it because it's a risk reward ratio killer. When adjusting here $100, even though just to the green candle, the risk reward ratio is just like 1 to 4.78. Actually, we can take this into consideration, but these small green candles are literally better. Or then on the way, as you can see here, red and green, when placing here the Anchored VWAP, here, and now aiming for this high, what is very interesting, here was a risk reward ratio of 7.4, even though when the market was already running 50% of the movement, what the market did here before, like from here to there, that's even almost like 60%. Even though here we can still get a risk reward ratio of 6 by aiming for this high, because the market did the same movement, because there's just a small color switch, just a small green candle. Very often the market works like this, that if the market does here the $1,000 movement or just a bigger movement, we place the Anchored VWAP, it wiggles around, and then once the market touches the Anchored VWAP, that it starts then from here to push up very nicely, starting once the market touched the Anchored VWAP when placing the Anchored VWAP right. And I literally hope that this will make you a better trader. Use it for yourself, and then wish you all love, good trades. JT out.